Welcome to Financing Your MBA with Juno. Thank you for spending your Monday night with us. Probably just wait a few seconds here while we see a lot of people are trickling in. Again, just want a reminder, right? This presentation is mostly going to be for U.S. citizens, U.S. permanent residents, and international students with a U.S. cosigner. If you happen to be an international student without a cosigner, don't worry. Let us know. There's many ways that we can help you navigate that and think through it. But when it comes to the deals that we're going to talk about and see, it'll be for most of the U.S. citizens or those that can find a U.S. cosigner. So just keep that in mind. And with that, let's kick things off. As a reminder, I want to let you know this disclaimer. Juno is not an investment advisor, financial analyst, securities broker. We cannot give you tax advice. We can simply let you know a little bit about our experience in the student loan space and specifically as former MBAs and how we navigated it and can hopefully pass on a lot of that knowledge and intel to you. Today's agenda will look like a bit of a 5-minute intro. I'll let you know who you'll be hearing from and talk a little bit more about budgeting. Then I'll pass it off to my colleague here, Diego, to get into the deep nitty-gritty of student loans, give you a full view of what you need to know. And then I'll take it back and introduce you to our loan negotiation group. And of course, we want a bunch of questions. We'll have time at the end for Q&A, but any questions that come up in the meantime, feel free to throw them in the Q&A, and we'll do our best to get to them as soon as we can. Awesome. So with that, let's meet your speakers. I'll start with myself. I am Andrew. I lead the MBA team here at Juno. I was a UCLA class of 2020 and a consortium fellow. I joined Juno actually just a few months back in 2025, and my previous experience has been in startups, in tech, travel, and sports. And with that, I'll pass it to Diego. Say hello.
Thank you, Andrew. Hey, everyone. I'm Diego. I've been with Juno for the last 5 years. I'm currently leading our graduate student loan efforts. I have an investment banking background and originally from Mexico. So happy to be here. And just as an FYI, we are recording this session, which will be shared with everyone who registered tomorrow.
Awesome. Thank you, Diego. So for those who are unfamiliar with our background story, we actually began as an experiment back in 2018 at HBS campus. Our co-founders were looking through their loan options and, like most businesses, thought there has to be a better way. Back in 2018, they went to Facebook groups and were able to bring together 700 other MBA students that were looking for a better way with student loans. And as the story goes, they all ended up saving a substantial amount of money on their student loan, around $13K on average. So, with that, it was, what made sense for us to, or for them at that point to make this into a business and be able to reach more and more MBA students and give them the most competitive loan offers possible. And that's where today we've actually been able to help over 230,000 students from top MBA programs and over $1.3 billion in student loans successfully negotiated. How we work? Well, it's fairly simple, right? Collective bargaining. Before, students would go in, directly to the lenders to ask for a loan, and many do today still, right? And you'll try to get your best rate possible going individually to each lender. What Juno now does is it brings students together and then is able to negotiate the loans on behalf of the group and ultimately get the most competitive rates and a better discount for everybody involved. We set up a timeline here, and kind of how it works is we want to make sure we can form that group throughout the year and basically up until April 30th and get as big of a group as possible so that on May 1st, when we go to the lenders, we're able to get the best rates and best terms possible for everybody and release those around June 1st and make that offer available to everyone. We actually currently have around 4,700 MBAs in the 2026 loan negotiation group, seeking $330 million in funding, and we're still looking for about 1,300 more by May 1st, just to make sure that we can really get the best deals possible. I know some of you are likely already members, and so want to appreciate all of those that are already there. If you have not joined Juno yet, I'll put this up here. Feel free to, check this out, join the group. We're obviously going to dive a little bit deeper into all of that. But really the biggest thing for us, right, is the more people we can get to join the group, the better terms we could secure. Even if you're not sure if you've gotten in yet, even if you're not sure if you will need a loan, it just helps give you that option, and it allows everyone in the group to benefit from the critical mass that we're able to build and the leverage we'll have with our lenders. So that being said, we'll jump into budgeting. Really thinking through, right, how much money am I going to need? Will I even need a loan? With that, cost of attendance, right, is not always going to cover the full MBA experience, right? No two MBA experiences are the same. I can share my experience. Diego will share his. But to give you an example, this is the cost of attendance of the 2025-2026 academic year at Harvard Business School. When they list this out, you'll notice a key thing here is they put a 9-month total cost. Well, pretty sure, all of us here, when we're paying rent, right, or when we're budgeting for, our year, it's on a 12-month basis and not on a 9-month basis. And so anytime you're looking at these numbers, you need to factor in, right, those additional 3 months and give yourself that, cushion, right, that gap. Part of it might be doing a summer internship, but you don't know what that will end up being and how much that will pay. The other will be post-graduation, which we can talk about in a little bit. But sharing from my experience, the reality of living expenses for me was probably between 5 and 10K each month. And my experience as an MBA was mostly, probably driven by trips, food, and alcohol as primary expenses. I'll cold pass it to you, Diego. Like, what are you thinking when it came to your expenses for MBA?
Pretty similar, actually. And I was there with my wife, so I had to budget for the two of us. I guess we'll touch base on the nitty gritty of cost of attendances, but yeah, it was pretty similar to yours. One thing that did help me out a lot was creating like this, emergency fund that was, roughly 6 months of my cost of living. Set that aside on a savings account and haven't touched it to this day. You never know which job market you're graduating into, right? So you don't want to kind of budget, to the cent on how much you're going to be spending those 24 months you're in school. So I don't know if I'm getting ahead of ourselves, Andrew, here, but that was my experience, and it worked out very well.
And a key thing that you'll learn from Diego in a bit when we talk about student loans is you're actually only able to take a loan on the cost of attendance, right? That amount. So that's an important piece too, right? Of making sure you understand what that cost of attendance is, and being able to understand how much you might be able to borrow. So Diego will dive deeper into that. And with that, we got our first question. I think this is a good time to stop and take that live. My program starts in the summer. It's Wharton Lauder. Is it possible for those in similar situations to still access 2025 loans? Or how would you recommend utilizing Juno for those earlier loans? That's a great question. Diego, do you want to take it? I'm happy to take it.
Go for it. Yeah. All good.
Cool. So the Lauder program is a bit unique, and there might be some other ones that have a summer semester or summer portion. With that, they treat the summer differently. So with Lauder and a similar program, you'll need to get a loan for the summer, assuming you'll need one, and then you'll get a loan then for the full semester for the fall, just like a regular program that would start in the fall. So to access that summer loan, we have a current deal live that is available today. You can go in, do a rate check, and be able to apply for that loan, for whatever that cost for the summer is. And then come June 1st, you're able then to do another rate check for what that fall disbursement would be for the rest of the year. So it'll just be two different loans, and that's kind of how Lauder will treat it. But again, I know there's a lot of programs there that might have a similar situation, and so always feel free. You guys can reach out to us. We make ourselves available. We have a lot of former MBAs that have gone to different programs and have experience chatting with thousands and thousands of MBAs. So if your program might be a little unique like that, feel free to reach out, book some time with us, and we'll definitely help give you at least the knowledge that we have. Cool. With that, I'll continue. Let me know. Hopefully, I answered that question. But otherwise, again, always feel free to reach back out to us. Big question is, right, how many trips will I actually go on? Well, that always depends, right? It's up to you to, make your own experience and how you want to, spend those 2 years or maybe 1 year in your MBA program. It also really depends on what program you're going to, right? Some programs will optimize a little bit more for travel, others may not. And so it's always important, right, to just understand what your preferences are and make sure that you're allocating those into that budget. But if you're looking for that general view, you might not know yet until you're there. We actually put together a survey back in 2024. We surveyed over 300 MBAs and got a sense of how much they were traveling. Right, what are they looking for in their first year as an MBA? So I know Diego just shared that link in the chat. Check it out. Hopefully, that's a good guidance for you to give you a sense of what that does look like. You also might be thinking, right, like, well, I might have some savings or my, checking account. Should I use that instead of, taking out a loan? And, the answer to most things, right, is it really depends. It depends what your values are, depends what you're looking for. What we would want to give you some perspective on is, well, one thing, right, and Diego mentioned it, you don't want to be broke at graduation. You want to give yourself a cushion and plan ahead. We're not sure when that job will come and, when you'll start. For instance, I graduated during COVID, and obviously no one was expecting that, but there was a big gap there between when everyone was actually going to start their job. So give yourself that cushion, and being able to have that cushion or that cash gives you options, right? Maybe you're going to go into a career path like entrepreneurship. You want to start a business, right? That's definitely one where that money will come in handy, right? To be able to help fund a little bit of what you're working on. So again, depending on what you're looking to do, that's always going to help you, give you more flexibility and make sure you're getting into the right job, the right position, and not just one out of desperation. And you'll see in the model here, right? This is just an example, right, of what the cost of that flexibility might be. If you were going to take out 30K as a loan, and just using the average rate from 2025 of 7.5, you would roughly be paying $1,800 just to have that money, for that just in case, right, for that flexibility, for that cushion. And so to some it might be very well worth it, for that peace of mind to do so. Again, that's on an example based on a 7.5. Everyone's rate will be a little different based on your background. So again, take a look and compare that to what maybe the high yield savings account might be, where you can store that money in the meantime, and what that delta looks like, so that you'll know what the cost will be to you. And again, we have a bunch of calculators and resources that should help you do that as well. The question is, should I sell my stocks, right? Same idea. It really depends. It depends on the interest rate you receive. And it also depends on, the market generally, right? It will kind of maybe have a historical return of 7 to 10%. That 10% really, though, being for longer term investments. We're not sure what, with a 2 year period, what that can look like. And so again, consider it as an option, but also remember that anytime you sell, right, a lot of stocks, that will become a taxable event. And that's something you might want to consider. Talk to your CPA or accountant and figure out if that makes sense for you at this time, versus maybe, other options there. And with that, I'll share a super helpful resource that we've put together. You can use the QR code, or I know Diego just dropped it in the chat. This here, right, is a spreadsheet. Make sure you take a copy of it before you put in your own details. And that'll just help you, estimate your expenses. It'll give you an idea where you can put in what funds you might have available, any financial aid, any scholarships, anything like that. Estimate some of the earnings you might make during business school with an internship. And then, at the end, kind of net out what loans you might need, right? What you should look for. And again, just back to that main point, don't forget to calculate an emergency fund. Mine was around 30K, just given, Diego kind of mentioned 3 to 6 months, sort of flexibility, just not knowing what happens after graduation. And so build that into your estimate so that what really makes sense of when you're looking for that number. And with that, I know we have maybe some questions. Is this a good time to pause, Diego?
There are a couple of questions here that I would like to address in this section, so that's why I was holding off. So hopefully I will tackle them at the end of this section. If not, we'll go back to them. So for now, I'll try to give you guys a quick overview of how student loans work, right? What's the process? What are the terms? The timeline of your loan, and a couple of important data points that I think will be helpful as you navigate this process, right? So first and foremost, as Andrew was saying, probably 90% of students, of MBA students, apply to get their student loans once a year, and that's usually in the summer, right? Between June and September, roughly. So after you've done your budgeting exercise and you know how much you want to borrow or you need in loans, obviously the next step is where you want to borrow from, right? And our recommendation is always to kind of shop around as much as possible, right? Because that's going to kind of give you a quick overview of how low interest rates are across the market, right, for you. Once you're ready to pull the trigger, you should complete the application process, and I'll double click on that process in just a few slides. Quick mention here is that in the case that you need to adjust your loan amount, either increase or decrease in the middle of your school year, bear in mind that there are ways of doing that, right? Our recommendation is to always loop in your financial aid office because they will be the ones that will be, I guess, the right person to guide you through this process. But just bear in mind that is an option for you. Now, our main recommendation always is you're always better off applying sooner rather than later. And I'll tell you why. Your loans are going to get disbursed according to your tuition due dates, right? So if you're saying, hey, I don't want to kind of apply for 100% of the money that I need in the summer because I will not need that money until the middle of my school year, just keep in mind that these loans are not going to get disbursed. Like I should say, they're going to get disbursed according to your tuition due dates, right? So I'll give you an example. If you're on a semester basis academic year, then half of your loan is going to get disbursed your first semester, and then half of your loan or your second semester, meaning you're only accumulating interest on the money that has been disbursed. I'm kind of getting too much into the details here, but just kind of the rationale of how these loans work is that, right? You're only getting charged on the money that has been sent to your school. If we can go to the next slide. I'm going to address one of the questions that are open here in the Q&A on this slide. But in terms of how much you can borrow, right, that's determined by a number that is known as your cost of attendance, right? That cost of attendance is unique to your school, right? So it's given to you by your financial aid office. And that cost of attendance includes two things. One, your tuition, and second, an estimation of your living expenses, okay? Now, if you're getting any scholarships on top, I guess if you're getting any scholarships, you will not be able to borrow 100% of your cost of attendance, right? You'll need to subtract the scholarship amount from your cost of attendance. Now, in special situations, and I'm addressing the question here in the Q&A, if someone has, I think it's called a legitimate reason for your financial office to increase your cost of attendance, having a dependent like a spouse or a child, that your cost of attendance could be increased by your financial aid office, but it's managed on an individual basis, and you have to make your case to your school. We put an example here, like if you want to get more money to go on Yacht Week, that's not going to cut it, right? You have to have a real reason on why you need more money from cost of attendance. Hence, you can apply for bigger loan amounts, right? Now, the private loans do offer a set of several options, right, in terms of rates, terms, and repayment plan. The ones you're seeing on the screen, it doesn't mean that every lender is going to show you all these options. This is just like a comprehensive overview of all the options you could potentially see, right? Interest rates, variable or fixed. A loan term it could be as low as 5 years or as high as 20 years. That's the highest I've seen. And there's many options in between. You might get a lender that only offers 5, 10, and 12, right? But you might get a lender that offers all of those terms. At the repayment plans, you can see up to 4 repayment plans, okay? Don't want to get too much into the details, but basically the rationale here would be you can be very aggressive on paying your loan back by paying both principal and interest while you're still a student, or being kind of deferring all of your loan up until after your graduation, right? Obviously, each combination will yield different interest rates, right? So the rationale here will be the shorter the term and the more aggressive the repayment plan, the lower the interest rate would be, right? But at the same time, the higher your monthly payment could potentially be. So that's kind of the trade-off that you have to think through as you see these options from a private lender. This is just a quick slide on the repayment plans that a private lender might offer you. I was just gonna highlight here that probably I would say more than 80% of Juno members on the MBA side, they take option number two, which is known as a fixed payments. Basically, you're paying $25 per month while you're in school, which that gives you like what's known as an auto pay discount. Basically, the lender will decrease your interest rate usually by 25 basis points in exchange of you paying $25 per month. And then all the interest that you're accumulating, that's just gonna get accumulated up until when you're graduating. But with that, you do get that discount. And then in case you want to pay more than that, say interest that you're accumulating any given month, you can always do so, right? So that gives you the optionality of paying more than what than the 25 per month, but at the same time you're getting that interest rate discount. So that's why that's the most common repayment plan. In terms of, we get this question quite often, like, hey, am I the only one borrowing 100% of my cost of attendance? And the answer is no, right? We see that more than 40% of students borrow more than $80,000 per year, right? So the main message of this slide is you're not alone, basically. There's many students borrowing, six figures worth of loans on a per year basis, right? So just want to kind of put that data point out there for you guys to see.
Also, actually, we have a good question that from the previous slide, just to make sure we get to it. What is the benefit of paying the $25 a month?
Correct. That's a great question. So the benefit usually is that you get that auto pay discount, right? Which means that the lender will offer a lower interest rate if you're paying them $25 per month on an auto pay basis, right? That's why it's known as the auto pay discount, right? So let's say that your interest rate could be 8% if you're not paying anything while you're in school, or if you're paying 25 per month, it could be 7.75%, right? When you take that into account in high loan balances, then you're saving yourself a few $100s worth of interest if you do that. Okay. Want to highlight one quick thing here. Probably this is top of mind with many students this year, obviously. What you're seeing on the screen are the federal loan options and obviously a private loan option, right? We're kind of crossing out the federal Grad Plus loan option because based on 2025 legislation, that's not going to be an option anymore for MBA students enrolling after July 1st, 2026 to their programs. So where does that leave you as an incoming MBA student? It means that you're only going to be able to borrow up to $20,500 from the federal government, and anything you need beyond that, you will need to go to the private side to kind of borrow from, right? Quick comparison here on how those two loans compare. Again, borrowing limit is $20,500. On the private side, usually you can borrow up to your cost of attendance. Interest rates on the federal loans are kind of fixed for everyone. Those are set every May by Congress, but it's the same for everyone, right? On the private side, as Andrew was saying a few moments ago, those rates are going to be dependent on your credit worthiness, right? Usually we don't see any origination fees on the private side, but the one benefit that federal loans do offer is on what is known as a PSLF, Public Service Loan Forgiveness, or income-driven repayment plans, right? Usually, we don't see any of those two things being of value to MBA students because it's not very common to go after public service or low-income salaries after school. So not necessarily you'll need an income-driven repayment plan. But those are an option that the federal government do offer that you will not find on the private side. Now, I guess the question now becomes, sorry, go ahead, Andrew.
Well, yeah, I think one question I know that's here and come up would be good to tackle is, if you could talk about more of the security of the private loans. And I guess I feel like there's a widely held opinion that public loans are more secure.
I would try to understand what does this person mean by secure, right? If you're referring to you getting the loans, the money, the funds, as long as you're approved for a private lender, they're not going to back off from that offer, right? I haven't seen that happening. I would say that probably the misconception, or I guess some of the things that people do not, I guess, fully understand on the private side is the interest rate, right? On the federal side, the interest rate is secure, right? Like it's secure in the sense that it's the same for everyone. On the private side, we do see many students getting low teens interest rates, right? So that's why probably kind of the private side is a little bit, I would say, scarier. But again, in terms of you getting the funds, I wouldn't put that as a risk on the private side. Now, the public service loan forgiveness is something that you would not get on the private side, right? And that's something that many students do use, probably in different careers than MBAs, but that's something that is top of mind on in many cases. So back to my point, kind of after you realize or you understand the comparison between federal loans and private loans, the question now becomes, hey, where should I get my first 20,500, right? My recommendation is if you're not using public service loan forgiveness or income-driven repayment plans, you're better off just comparing loans by interest rates, right? So if the private market yields a lower interest rate than what the federal government offers, then financially speaking, you're better off going 100% private, right? If your interest rate is above what the federal loan offers, then you might consider taking the 20,500 from the federal government, and then anything you need on top of that, go private, right? So that's kind of the rationale I recommend using.
And just to note, we actually had this calculator here that you can get from the QR code. This will help you, understand what is in your benefit given the rate that you end up getting, right? So you'll plug in your rate, and you can compare that option with the federal loan rate and see how much you're, up to potentially save on either end to make that decision.
Awesome. Yeah. So kind of the timeline, right? How does that work? Now, once you apply to your loan over the summer, right? And let's say that your tuition due date is around August, that's when your money is going to be sent to your school. Again, it gets disbursed according to your tuition payment calendar, right? But in this case specifically, you would be in school roughly 21 months, right? You're enrolling August 2026, you're graduating roughly May 2028. And then usually lenders give you a grace period, right? That's between 6 and 9 months. But let's say it's 9 months. So up until February 2029 is when you're actually going to start making your payments back to your lender, right? The period between August 26 and February 29 is called a deferment period, right? Meaning you're not obligated to pay any of your loan amount. Obviously, if you selected the repayment plan, that you're not going to pay either interest or principal. But all that interest that you're accumulating on that deferment period is going to get capitalized towards your principal. And then February 2029, in this example, you'll be making your first payment. And then on a 10-year basis, then that means that by 2039 February, you'll pay off your loans. This is not a scale, obviously, but that's usually how it works. Now, the application timeline. There's a lot of information on this slide, but one thing that I want you guys to get out of this slide would be you can apply for a loan and get approved, say June, right? And you will not have your tuition due until later in the summer, right? Let's say August. That doesn't mean that you start accumulating interest in June, right? You can get a loan approved, and then the process after that loan gets approved is that your lender is going to work with your financial office at your school on a process that's known as the certification process, right? Basically, that means that the school will certify that the amount you applied for is within your limit, right? Within your cost of attendance. But again, that process happens in a couple of weeks, right? So you can get fully approved by June and not start paying any interest or getting charged any interest until when your money is sent to your school later in the fall. Application process usually takes 1 to 3 business days on the private side. We haven't, 90% I think of cases get approved in 1 business day. So it's pretty, I would say, quote unquote, easy to go through the application process. And with that, I hope I gave you guys a quick and good background and overview on student loans. I don't know if you have any questions here, the Q&A, Andrew, that we should address right now.
Nothing right now, but I'm sure some will trickle in as they
All
digest
right.
that. But thank you, Diego. So yeah, with that, would love to kind of share what we were able to do this 2025 cycle, and then introduce it a little bit what we're looking to do now in the 2026 cycle. So, like we kind of used in the previous example, the average loan rate for a Juno member was around 7.5%. If you compare that to the average loan rate to the top two lenders out there, that's a difference of around 4%, which is really around $27,000 over the life of the loan. So really making a huge deal, right? I think what's even bigger is that, historically, only 5% of Juno's MBA members reported finding a better rate outside of Juno. So that means 95% of the time, students are finding a better rate when they go through us. And I think that even now, what we talked about, comparing even federal to private, 82% of the time, Juno members will get a rate below 8%, which is what you saw was around that, federal rate from at least last year. The grad plus rate, which is no longer an option, was around 9%, and 99% of students got better than that, right? So it really just shows what the value is of, this group discount model, this collective bargaining is where we're able to really get the best rates, right, for everybody or for most people. What's even better about that is we're going to basically make sure that we're fighting for eligibility as well. It's not just about getting the best rates, but it's about opening the doors for as many students as possible to get a rate. You'll see here that 92% of Juno members were approved when they did a rate check. 85 of those basically without a cosigner, right? And knows the income requirement. We know you're MBA students. We know you're not going to have an income. And so that's why when we're negotiating with lenders, we're building it for you. We have an understanding as MBA students what's important, where there's no origination fees, right? We want to make sure we build in deferment periods, and that's why we have you in mind. And I think even kind of going back to the question we had about, maybe this is my understanding of what loans are more secure. It's when it's a federal loan, there's only one type of loan. Everyone just has to accept it, right? With private, there's many different options, right? Depending on the lender you go with. And that's where Juno comes in, right? When we negotiate on your behalf of the group, we're able to have your best interest as an MBA student in mind and making sure, right, we can get you those best rates and compare that, right, with what we know is out there in the market. Same thing with the eligibility, we can compare that. And so it's really given you that peace of mind being with us as someone who will vouch for the deals that we're able to get through and get you the most competitive ones possible. So I mentioned again, 5% did not find the best rate with Juno, and that could be for many different reasons. But what we want to do is we want to put our money where our mouth is, right? We know that we have that collective bargaining value, and so we actually have a rate match guarantee. If you find a lower rate, we will give you that rate, we'll match it, and then give you 1% cash back, right? So depending on the size of your loan, that could be a couple $100, that could be 1,000 plus. But it's really just us, again, having the confidence in our model and our system and knowing that through us, you'll find the best rates. And it's about incentivizing you to shop around, like Diego said. We want everyone to fully explore all of their options possible so that at the end of the day, whether it's finding it with Juno or having to do a rate match and get a cash back, you got the best deal that you could have gotten at the given time. And it's just that insurance that you're basically, peace of mind, right, that you're buying and we want you to have. So with that, I'll tell you a little bit more about what we're looking to do this year for this 2026 cycle. Again, similar to what we did last year, right? We want a large discount for everyone in the group. Again, just to kind of reiterate, that 7.5%, that's the average. That doesn't mean that everybody gets just 7.5%. It depends on your credit worthiness. We can see ranges of people getting, I think last year was in the high threes, all the way maybe into a bit, higher than 7, but on average, right, it was around 7.5. And so it really depends on where you are. What we can tell you, right, is that 95% number of 95% of the time, the chances are you'll find the better rate through Juno. So we want that large discount for everyone. We want to expand that eligibility criteria. We want rates again below the federal student loan options, right? That 82% we saw last year. We want to continue building on that. We want zero fees, no origination fees. And again, and continue to provide that peace of mind with a rate match guarantee. And again, to do all this, right, is where we kind of were talking about earlier is we really need to grow that group and make sure that we hit that number to be able to, have the best leverage to get all that we're asking for and more. And so just again, looking at this timeline from now until April 30th, that's where we're trying to basically grow that awareness and bring as many people who are just even considering a loan option into the group to help boost our numbers and give us the best chance to negotiate. So again, that's you, that's your classmates, your friends, anyone who, again, will be taking a loan 2026, whether you're an incoming student or first year going to second year, you will help the ultimate outcome of our negotiation. On May 1st is when we go then and take that group size, go in front of lenders and basically have them, work against each other to get the most competitive bid out there. We work with, all the top tons of lenders. And at the end of the day, we will showcase probably 2 or 3 that have won essentially, right, the bid to, provide the most competitive rates to you guys and hopefully, provide you the best option. And we'll release that on June 1st when we'll make that best offer available to you and kind of everybody else. But again, the important part is that group size before April 30th to be able to unlock the best deals for everybody on June 1st. And as I said, probably around 4,700 MBAs currently in the group. $330 million of funding. That's, something that's very substantial, but to get to our goals, we'll still need around 1,300 more students by May 1st. So we'll just repeat that, from your perspective, what we could do right together as a group is one, if you're not a member yet, we'd love you to join, right? We have a bunch of resources, many that we shared today, and we always make ourselves available for that one-to-one consultation, whether that's something now and you're just kind of thinking through it, or that's June when you actually do your rate check, you want to talk through it, you want to, explore your different options. We would love to hear from you. If you are already a member, that's awesome. Again, reach out to us, let us know how we can be helpful. But if it's, at any possible, help us spread the word, right? You're all coming into, with classmates and friends. The more people we bring, the more that everyone's going to be able to benefit and get that discount. And, if it's of interest, we also have a great referral program that can help give $100 to your friend or your classmate and $100 to you. And so whatever it takes in terms of growing the group, we're here to work with you and make sure that everyone can be in the position to best, pay for finance their MBA. So with that said, I'll open up to questions. I'll leave this QR code here, right, if anyone wants to make use of it. But I do see we have maybe a few questions up. Let's see, Diego, do you have a track of which one we want to start with?
Only seeing one up on the Q&A.
Cool.
I'll send it to you. This person is asking, is it better to shop before or only after having the junior rates available in June?
So we have a current rate live. It wouldn't hurt for you to do a soft check now, see what that rate looks like, right? That would still get you, an option, right? Potentially for when you want to start. But then you're able then to, in June, check your rate again and see how it compares, right? Which one's better. And so, we feel every year we're trying to get more and more competitive. And that's why, growing the group allows us to get even better deals. And so, with the momentum we've seen so far, we feel very confident in what we'll be able to bring in 2026. But yes, the rates now are an options for you. And feel free to do a rate check. Feel free to, schedule some time with us and be able to review that, in person or sorry, over the call and see where you stand on that. Cool. I see another one came in. What are the papers or documents needed for internationals other than an offer letter? And with that one, I'll pass it to Diego.
Yeah, sure. International students are kind of different in the sense that the eligibility is different, right? So to work or to use Juno's negotiated deal as an international student, you must have a U.S. cosigner co-signing a loan application on your behalf, right? So in terms of paperwork, that cosigner needs to be either a U.S. citizen or a permanent resident That person has to have income in the US, a minimum credit score, so on and so forth. So there's some eligibility criteria that that person needs to comply with. And in terms of paperwork on yours, from an international student perspective, you just need to add, I think, is your acceptance letter and I believe your ID, and I think your visa at some point. But it's generally kind of focus on your cosigner. Now, if you're applying for non co-signed loans with international you know student focused lenders, then that's a different story, right? As you know, we do not broker any deals with them. We do know they exist, and we can point you in the right direction based on your situation. But every international student specific lender underwrites differently. So if you want, just shoot us a note. I'm happy to connect one-on-one to kind of guide you through your options as an international student.
Awesome. I got another one for Diego. Does the rate change each year? And each year, will there be a new loan?
Yes, great question. The answer is yes, definitely. So I think probably something that we haven't touched base on in depth here in this presentation is that it doesn't mean that the whole group is going to get a single rate, right? Again, every loan is underwritten individually, right? So you will get your own interest rate based on your credit worthiness. Okay. So let's say you're applying for your first year of business school for your loan. That's going to be one loan, and then you need a second loan for your second year. That's going to be an independent loan from your first year, right? That second year loan is going to have its own terms and conditions, right? And the interest rate on that second year loan will depend on your credit score at that point in time, but at the same time, kind of market environment, right? And what has happened in the market, from the first time you apply to that second time you're applying, right? So that also affects your interest rate, positively or negatively, right? But it's going to be independent interest rates from one another. You think I'm answering that question that way? Okay.
I think, it's going to be, again, as Diego mentioned earlier, right? Every year, your first year, you're going to need to get a loan, and then your second year, you need to get another loan. And those rates, right, will vary based on what the rates are available at that time. And at the time you do the rate check, kind of what's available and what's available to you given your credit worthiness. And that's just, kind of how it works. That's where we can just make sure that regardless of the environment or anything else, we can get you the most competitive option possible. And with that, we got one more, Diego. Does cosigner's annual income level matter?
Yes, in that case, there's a minimum set by the lenders, not Juno, right? The lenders do ask that cosigner to have a minimum annual income of $35,000. And then beyond, that's kind of what gets you to be eligible. And then obviously the higher that income, the more favorable we assume is going to be your interest rate. So yeah, the answer is yes, it does matter.
All right. It looks like right now we've covered all of the questions that come in. Any other questions from out there? Anyone? Well, if nothing comes in now, again, guys, I think what we want to make clear, right, is that we are here for you. If you haven't seen our link already, and I don't know, Diego, if you want to share maybe a link that they can reach out, we'd love to hear from you, right? Book a time with us. We have a bunch of people on our team that are former MBAs. If it's helpful, maybe finding someone, right, that went to your program, or we would love to talk to you. But reach out, whether that's now or when you do your rate check, maybe over the summer, and see how we can help you navigate any of this. And yeah, I think I see one other question come in. How do we see the current 2025 rate?
Yeah, I'm dropping a link shortly here in the chat for anyone who wants to check a rate right now from our previous deal, where you could just input a quick form, and then we'll show you rates. It's gonna be and this URL.
And the link that Diego is sharing, right, that's to do a soft check, right? That's not going to affect,
correct.
It's not going to be a hard pull on your credit. We advise you do soft checks and shop around with soft checks up until you find the deal that you are interested in moving forward with, and then go to do the hard check. But yeah, you don't want to be doing a lot of hard checks, because that will definitely affect your credit. Make sure anytime you're doing something like this, it's a soft check just to give you a sense of what the rate would look like. Cool. And yeah, so again, with that, feel free to drop any other questions. But again, we sent that link where you can book a time with us, or again, we're always available also via email. We'd love to hear from you. Well, you'll get a follow-up email from us with the recording here. So if you had any questions that maybe we went too quickly on, you can always rewatch our recording. We have a bunch of tools as well, and these resources on our website. But overall, just want to say thank you guys for joining us on this Monday night, spending your Monday night with us. We're here for you for whatever you need, kind of as you now wrap into your journey, whether you are an incoming student or even a first-year student trying to find better options for year two. And I think I could easily say that we're both very envious of you guys being in your MBA journeys. It was a great 2 years. So congratulations on doing it, and excited for you guys. And again, if we can be helpful, whether it comes to student loans and Juno, or just giving advice from one MBA to another, we would love to be able to do that for you guys. So with that, would like to say good night, and thank you for joining us.
Thank you. Thank you, Andrew.
All right, guys.